The everything bubble is here, but is it popping or are we still loading? Some of you long-term followers know where we are going from here, but for the majority, they are expecting a major collapse with the news from the interest rates. However, if you had been following Twitter, we've been talking about this for weeks, even, I hate to say it, but predicted it to a T at that time. Now, I'm not going to bang on about that because it is my birthday. Hit that like and subscribe button. It's your home of macro cycle analysis. Let's get the balloons going on. Happy birthday to me. Thanks once again, guys. You know the deal. Let's crack on with the video. We're looking at the interest rates announcements and how this is affecting the everything bubble. The stock market's going up, real estate going up, Bitcoin and cryptos had continued going up until the last 24 hours, of course. Interest rate announcement was a pause. Here is the headlines, biggest winners and losers from the Fed. The announcement is that the interest rates were on hold. Now everyone's going to be looking towards the next one. But notice this time in 2024, how much less excitement or less interest there is in these announcements. It was nowhere near as big as what it was in 2022 as they started to rise, nowhere near as big in 2023 when they were also rising at that time. And now we see the interest start to lag on more of these economic announcements. My forecast, my prediction is that the bearish news is going to get less and less leading into these last couple of years of the real estate cycle. The major peak leading into that winner's curse phase. And the media is going to be allowed to be bullish for once. Often it has just been bear after bear after bear while the markets have been going up for a decade and a half now. 2024, we've been up since the lows of 2009 after the GFC with a correction in, we had a nice one in 2010, 2011, 2015, 2018, and of course, the most recent two, the pandemic and the 2022 correction. Now, are we on the precipice of another correction? We've looked at this multiple times, especially as we compare what's going on in the market now to what has been happening for the Bitcoin cycle. Remember the big signal here for the Bitcoin cycle, the S&P 500 running into a new all-time high. We got there. It's happened. The S&P hit a new all-time high. So the signal from here is that the market has a correction. Now, the size of the correction is not at question here. It can be a pandemic collapse, or it can just be a steady, longer collapse to the downside, like what happened in 2015. Or we could look at something like 2012, where it was a nice, simple correction to the downside after a very nice, strong run to the upside. Then after that correction, S&P runs into another all-time high price. There may be a slight correction, probably less than the last one. And then, like we can see here, and then we run into this mega bull market. Now, I did see a comment from the last one. So just to clarify, these squares, we are looking at the cycle of Bitcoin overlaid on the S&P 500. So this bar chart is the S&P 500. The squares are for Bitcoin. And then what happens is all of the markets just go ballistic into this bull market. They're just running up like mental cases into this bull market. Bitcoin, cryptos, the S&P 500, I suspect real estate is also going to be in that category as well, into this everything crazy bull market of 2025. So let's have a look at the shorter term time frame now for the S&P 500, because if this is the peak, as we've been talking about for the first half of 2024, getting that correction and it being a little bit messier in the first half before it becomes clearer in the second half, how far down can the S&P go? Well, we're currently about 1.8% down. A couple of areas that we'll look at are very simple support and resistance levels looking back on the chart. Because remember, we're just detectives trying to figure out what happens on the black side of the chart, the right-hand side of the chart. There is no exact answer. You're not going to get a gold star if you get it right because, well, you might get a like on your tweets if you get it right, like we did with the interest rate announcements. But that's it. The market doesn't care. You get it right or wrong, they don't give a shit. It's up to you and how you play the market. Okay, so to the downside, what has happened in the past? You got the peak in July to the bottom in October, roughly 11%. The previous pullbacks you can see from The tops here in February, January of 2023 to the lows, about 8 to 9%. And the previous one was also roughly the same, about 9% again. So they were the three biggest ones we saw in 2023, 9%, 9%, and 11%. The chances of a double digit, very slim, as we discussed through this area, and it did get to the double digits, it got to 11%, but that was it. The market basically skyrocketed from that point. And so the main message from all of the data that we're going to have a look at in today's video is, although this half of the market, this half of the year, the first half of the year can be a little bit rocky, the data has shown that the second half, and I guess if you look at it for the entire year, is going to be positive just on the probabilities. So let's just have a look at the percentages to the downside and see if any of them line up with previous support and resistance levels. And of course, our major 50% level coming in, if this is the top. Remember, that's an if because it hasn't been confirmed yet. We haven't got a breakdown of the swing chart. Let's have a look to the downside on our single digits. So any of the single digits basically take us back to previous old all-time high, the support levels back at 4,700, the other previous resistance levels at roughly 4,600, so that's about a 7.3%. And then if we want to take it back all the way down to the 50% level for the entire range, that should be around 14.7%. Now, before we get there, we have to test the 50% level. So the 50% level of the range from October to the peak. Okay, so this is all setting up for a healthy correction thus far. Let's have a look. To the downside, to that 50% is about 8.3%. So we could still see a very significant correction, something very similar to what happened in the past. That would take us out to test the previous tops, test the previous resistance levels before the market fell down, test the July tops, test the tops in December before the market broke out, and would still be above the 50% level, which, if you've been following, strong half, weak half of the 50%. Strong half at the top, weak half at the bottom. A single digit correction would still mean it would be a strong half of the tool and a solid, healthy correction. Now, someone asked, how do you do the 50%? Use this tool here. That's your fib retracement. Click again, job's done. You want to change some of those settings, double click, turn these on and off, which ones suit you. I use 0, 0.5, and 1. That gives me the 50%. Change your colors, job is done. Choosing the correct highs and lows are the key to using that tool. You don't want to use it from any particular point in the chart. That's not the idea of it. It's essentially a calculator that divides the range in half. That's as simple as it is. So we've been watching what's going on with the interest rates at the moment. We've seen the Fed pause. And as I pointed out here on this tweet, going back to the 15th of January, if you want to do better than 90% of investors, we know most people fail at these markets. We've seen it time and time again. If you haven't yet, go hang out on Twitter, go hang out on some other YouTube videos, and you see just how bad it is where people just follow what the news is saying. Remember, a month ago, everyone was expecting rate cuts. We didn't get them. No rate cuts. There's your reminder to hit the like button. But yeah, what we were looking at here was, what if the Fed does not cut rates? Remember, what everyone was thinking back then is they were expecting rate cuts. Everyone wants these rate cuts. But what if they don't cut the rates on the same timeline that the masses believe they should be cut? Even a pause could be seen as a negative for the market price direction. Next minute, down goes the S&P. Well, we had the pause. Next minute, down goes the S&P. So some might say that's a pretty simple call to make. At the time, it was much, much more difficult because most people were expecting rate cuts. Okay, so then once the initial few shocks are over, maybe this lasts for a couple of months. Maybe it lasts for the first half of the year with some turbulent times up and down. Once the shocks are over, investors will realize that the market was doing just fine with interest where they were and could start investing again. So basically interest rates are roughly 5.5. Maybe we get 1 or 2 or 3 cuts this year. Maybe we don't, right? Who knows? Only Jerome Powell knows at the time. Meanwhile, they probably wait for the dump and then for the market to recover to levels above where they were before the interest rate decision. Do the opposite thinking and don't overthink it. On the flip side, you can always just simply follow the chart. What does that mean? Well, maybe they wait for these dumps because they're like, now's the time. The market's collapsing. It's all going to be over. Wait for these levels to keep coming down and down and down. And then they get greedy to the downside. They miss the bottom again, like they did in September and October of last year as the most recent example. And then the market just shoots off without them. Because here is some really, really fascinating data. While in the short term, we may see some downside and some volatility, in the long term, the S&P has a very high track record of finishing positive. And so if we want to see a nice big bull market in Bitcoin, we definitely want to see the S&P finish positive at the end of this year. We've got our peak. Remember what happens next. We typically see a correction after the S&P hits a new fresh all-time high. Fresh all-time high took a few more months there in 2015, that is, got the correction, okay? So that was as Bitcoin was in its accumulation, which I've pointed out exactly what it is back then. This has been on the chart the entire time. Bitcoin pause or correction at the first S&P 500 all-time high. So the first time the SPX hits a new all-time high, Bitcoin pause or correction. And that's, again, I don't mean to say it over and over again, but it's exactly what Bitcoin has done. Bitcoin has paused and corrected at that time. We got the pause and now we're seeing the correction, okay? So it's just essentially just following what the market's doing, trying our best to decipher what's going on in the black space. Remember, we were talking about that here, trying to decipher what's going on in the black space over here and not getting too caught up with the emotions of the market. So in terms of the data, the big final 2 months of the year is quite bullish for next year. So S&P 500, we saw the last 2 months of 2023, nice and bullish. What does that mean for 2024? This particular piece of data says, well, if the first 2 months are bullish, S&P returns after 10% returns, greater than 10% return gain in November and December. What happens in Q1? What happens through the entirety of the next year? And you can also see for January. Well, we had 2023 had a 14% return. January has been a 1.23% return. We got the closing price there. For the first quarter, we'll have to wait and see. So this one now increases the probabilities of a higher percentage there. So this one was positive. And then in the first quarter, 100% of the time it's been positive, and 12 months later, it has been 100% of the time positive as well. So if it is 5.6% return at the end of Q1, where would that leave the S&P after maybe a correction in February, and then we get a bit of a bounce back in March? Well, we're measuring from the December, January, basically the same price here. Let's go up 5%. It's going to be roughly 5,100 points for the S&P 500. So we've got 100% accuracy here for Q1 and for the entirety of the year. I don't know if Q1 is going to make it to this and be another positive. Eventually, you're going to get some sort of negative. But for the 12 months, we have seen so much data to suggest that the 12 months for the markets are going to be positive at the end of the year. Basically, closing above the open. That's it. Throughout the year, anyone's guess at this point, but the end of the year should be a higher close than the open. Same deal for the NASDAQ. What we've seen already, highest daily close in history, highest weekly closes in history, highest monthly closes in history. We've seen that now 2 months in a row. Yes, we have. And highest price in history, new all-time highs. I don't think this is going to stop anytime soon, but I guarantee you, if this is the local top, you know the difference between local and final top, if this is a local top, you will likely see those bears come back. They'll start to call for further and further downside. I don't think it's going to be as loud as it was back in March of 2023, and I don't think it's going to be as loud as it was in the October correction that we saw in 2023, but damn, they'll try. They will keep trying to tell you that this market is going to collapse. Moving on to Bitcoin right now. Well, the day has just opened after a monthly close and a daily close. We are now down to 42,200. Remember yesterday's video, we were looking at exactly 43,800 as a potential resistance point, and Gann gave it to us again and said, look at your 50% levels. This is the range, top to bottom, nice healthy 50%. It tried to come back this morning and failed again and started to work its way back lower. Some volume is picking up to the downside on the short-term chart here, the 4-hour, and again, smashed it, rejected at the 50% level. So let's look to the downside at 41,200 and also these lows at roughly 41,700, okay? So that's the area that we're watching for Bitcoin next to see if it can hold support or if it breaks down from those levels over this period where we've seen the interest rates pause as we had anticipated a couple of weeks ago now, and that then leading over into some negativity for the price on the S&P 500. That also lined up with our major signal here for the S&P 500 running into a new fresh all-time high, potentially correcting, and then later in the year attempting to have another go at the all-time high. It could be sooner. Maybe it's in Q2 that we hit that again, okay? So that's where we sit for Bitcoins, just starting to come down a little bit further. What about cryptocurrencies? So before we get to cryptos, shout out for the channel sponsors, SwiftX. You got BitGet and Bybit here for you guys overseas. And if you do want to use those exchanges KYC free or no KYC, check out the Palau ID card, the digital ID that you can get access to online. Otherwise, for the Aussies, check out SwiftX, $20 free BTC when you sign up using that particular link. Let's check out the cryptocurrencies and what they are doing now that Bitcoin has had a couple of days slide to the downside. So you can see here on our 4-hour chart, a few more hours to the downside. The daily now, we've got 3 red days so far. This day's just open, but essentially for our down days, we're into our second day should this day continue down, okay? So a couple of days there. Now, for the altcoins against their BTC value, keep an eye on the support and resistance levels for those particular ones. Remember, we'd been talking about these peaks back at the jelly time when the influencers were getting really excited by their jellies and how these markets had to explode. If you have a short-term memory, keep some of these backed up in your bookmarks, your saved searches, your tweets, specifically those times, so that you can remember the feelings of those people and how the markets were going crazy. Specifically, the 14th, 15th of December was basically a peak for a lot of these markets, or one of the final peaks. Yes, the PSY is the preliminary supply, and then it leads over to your buying climax. So that seems to be what's happening at those times when those particular influencers, basically all the big ones, everyone that watches them for entertainment purposes, that's the time that they get excited telling you to buy at those peaks. Typically in a distribution schematic, those peaks are the preliminary supply. So some more of that supply is coming into the market saying, well, I think the buying's wearing off, but everyone's excited here thinking the market's going to explode, which then leads to the buying climax. There is your buying climax. And basically you've got probably a couple of up thrusts after distributions or up thrusts just in general before the market fades out into a sign of weakness, and then up again for last points of supply, and then again to the last points of supply and last points of supply before we start to come down. So check that out in the chart here. Maybe that's the preliminary supply. Maybe that's your buying climax. Then you had an up thrust, failed, sign of weakness. Another test to the upside, up thrust. Another up thrust, it's just not breaking through, right? And then you start to see some of the major support areas begin to break down. It hasn't happened yet. It looks like it's on the verge of it, and it could happen over the coming days, of course. So keep an eye on roughly those levels on your charts. There is injective for you. Let's have a look at Link. I haven't even checked this out this morning. You can see how it's happened there. You had the October, then you had a peak here in November. That was another time that the jellies were getting all feeling for a lot of influencers and the unsuspecting newbie crypto investor. There is the final peaks, and then of course market starts to wear off. Signs of weakness. Hopefully you've seen this chart enough now to start to recognize how the distribution occurs. Bigger moves to the downside over and over again. The unsuspecting traders, crypto investors are buying up these lows. Let's buy the dip. Let's buy the dip. And they start to come back down. Now, eventually, they have bought the right dip, but who knows? Maybe they bought this dip because their favorite influencers were talking about it, and this dip, and this dip, and this dip, and then all these dips all the way down. So their average price is somewhere out around here. Now, in the early stages, like where we are now for the crypto altcoin season, which at least in my opinion is going to go ballistic towards the end of this year in 2025, this isn't going to be such a bad time. When this is a bad time is when you buy around the peaks, when everyone is here. So they're trying to buy this dip and this dip and this dip, and you get the idea. They start to buy all these dips, and eventually they might be right for a period of time, and then it fades out again. That's the problem. Now is not the biggest problem, but if you can identify if you've been sucked into it in this time, then hopefully that is going to save you at those times. This, you can get out of it. I think personally, don't hold me to it. but these times could be a very, very good lesson if you did get sucked into it with the jelly calls up here from, the likes of those big influencers with over 1 million followers and how the people were buying at those peaks. Learn through it at this time, hopefully save yourself at those times. So that's not to get confused with now being a great time to be buying altcoins should you be finding those strong altcoins. The reason I bring that up is so that you can see the lessons of when everyone gets excited. It's typically at those peaks. As I said, now you're probably going to get out of jail, I think, but you won't get out of jail when it comes to the peaks of the market, okay? The real final peaks. So use that as a lesson. If we got caught up with it, save it so you can see it in the future. I'm going to say happy birthday to myself and thank you all for being with us here today. Hit that like and subscribe button. Links in the video description for the free TIA report. I'll see you at the next video. Until then, take care and peace out.